Hello, it is the 2nd of March 2011, and I'm going to be starting this off with comparing silver and multiple currencies. As yesterday I was going through different time frames, and on silver, basically on the New York time frame and other ones, and I'm going to keep up with that on this video, looking at a bunch of different charts, but fairly quickly nonetheless. We'll start off with silver in three different currencies because right now it's pretty close for Australia, Canada, and the US having the same currency. So the blue is USA dollars, red is Canadian, and green is Australia. Now what's interesting is Australia never went below 15 really, and they had they had a much different chart. So what I'm seeing on this particular chart here is what it looks like is the American dollar is going to look to go lower than the Canadian and the Australian one. We can see within this gap how they're just moving forward. But I want to make this really quick, so I'm just going to go over the next few charts. And this is a comparison, the same one I was showing yesterday within silver and the US times versus the non-US times. So I'm just going to show the chart and move forward. I think a lot of it is just spoken with the image. And I decided to just go crazy. This one I did much earlier today. And from what I've seen, it looks as if that the Canadian dollar is being pushed up outside of the New York time frame. This is hours after 4 o'clock, and these are hours from 9:30 to 4. Just taking the FXC ETF and then using the New York time frames for blue and non for orange. It's going to be the rest of this way for quite some time. The next one is the Dow Jones using DIA, and it is more volatile on the blue one. That's because it trades more. It's trading its own market, and it's gained more. So this all starts off around 90. It goes from 90 to 140. So it's over and this is over 2 years, by the way. All of these charts are over 2 years. The currency one was longer, but this one goes back to March the 9th, 2009. I didn't put much for dates in here, but I was just doing these very quick. So that's the Dow. This is Goldman Sachs. So it doesn't have much volatility outside of its New York time frame, but it does in here. Overall, it gains about the same. USO, which is the oil ETF. I think this is a nice little divergence, but gains more on New York time frame. SLW, Silver Wheaton. Do I need to say more? Do I really need to say more? Next one. TLT, which is the bond ETF. It looks like, if anything, it's being bought up a little bit more on the New York time frame, but overall, it's looking fairly reasonable, the comparison. Berkshire Hathaway, once again, more upside on the New York time frame. DBA, the Agriculture Fund. Well, it looks like that we're not buying it up. If anything, it looks like they are buying it up. A very interesting divergence here. I mean, Silver Wheaton was not the same way, but very similar, but very interesting. UUP, which is the currency. Once again, just interesting divergence. Overall, it's pretty much at the same level from March 9th, 09. DBC, the commodities ETF. It's been really going on well since here. Well, for the US, it's looking like it might start to go lower because they don't like to buy stuff like commodities, do they? We'll see. Anyway, obviously a lot of these commodity funds are being bought up after the New York time frame. BP, British Petroleum, or however you say it. Just pick a random stock. Obviously, it's performing better on the New York time frame, but look at this top compared to this top. So as this market was rallying, this one was selling off because I can draw a straight line right from here and then manage to see it had one leg lower in the New York time, or in here it went up. Don't know if that means anything. Moving on. And this one is the final one. This one I may need a little bit of help with. I don't know what to explain on this, but I took the data from the LBMA. This covers a lot of days. This is 1968 to now. About 12,000 periods. I don't know what's going on here because the data doesn't make sense. It doesn't make sense, but I've looked over my formulas only about 20 times. I've verified the morning numbers on gold, at least for the last few weeks. They've been fine. But the price of gold is getting hammered with a capital H during the LBMA time frame, which I searched on Wikipedia, is from 10:30 a.m. to 3 o'clock Greenwich Mean Time, or UTC, however you want to state it. So what it means is not during this time frame silver goes up, which means I guess it's the Japanese time frame where silver keeps going higher. It really doesn't make too much sense. So back in the 1980s, when gold was really skyrocketing, it didn't do anything here. I can't understand this at all. It's either the LBMA is putting out data just to make me pull my hair out, although not literally, or something's going on. That just doesn't make sense. Now, what I did is I took the data from the LBMA gold page. This move here is the PM number, subtract the AM number. So basically, I would do a formula like the PM close minus the AM close, and then divide it by the AM again to get its percentage gain or loss. And then that's how I would, that's how all these movements would go up and down based on its percentage gain or percentage loss. But to go from, well, really it all started off at 35-ish or so, 38, depending on the price in 1968. But for this to go down to like 6, that's like losing over 90% or 80 something percent. This number here is like gold 9,000, 10,000. Actually, it's almost 10,000. Yet gold right now is only at 1,400. So it almost states, at least based on these LBMA numbers, by buying gold at 3 o'clock Greenwich time and selling it at 10:30 in the morning Greenwich time, you'd be doing fairly well. But then again, I don't know if the LBMA data is correct or not. But it's an unusual results anyway. Take care and have yourself a good day.